In this video, we're going to talk about support and resistance, which is one of the oldest but most effective forms of technical analysis. Now, my brother and I are fortunate enough to know some traders that trade for some of the big banks and some of the big hedge funds in this world. And, you know, we've had conversations with them in the past, and we've asked them what sort of tools that they use, and every single one of them use support and resistance in one way or another. So if it's good enough for them, then it's certainly good enough for us. And I literally wouldn't know what to do without support and resistance. So in this video, we're going to talk about the basics of support and resistance and how you can use it in your trading to improve your results. So support and resistance is the most basic yet effective form of technical analysis. As I said to you, most of the market participants on this planet use support and resistance in one way or another, whether it be to acknowledge the levels for profit taking or stop placement or whatever it is. All of the professionals that we know anyway use support and resistance in one way or another to help assist them with their trading decisions. So what's a support and resistance? Well, support is a level where the sellers find buyers. So let's imagine that the market has been moving down for a period of time. The support level is a level where the sellers will find buying pressure. Okay, so as I said, the market's been moving down, it's been going down, 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 and then suddenly the market can go no further, and the market either bounces or it hangs around a level and consolidates around a level. That then forms a support level. And what it's actually doing at this level is either the sellers are doing a bit of profit taking, or the buyers have got involved and they said, no, you're not going any further now. We're going to hold the market at this level and hence support the market at a particular level. A resistance level is basically exactly the opposite. It's like a ceiling in the market. So the market's been moving up for a period of time and the buyers have been in control. Then suddenly the buyers find a wall of sellers and the market can go no further. And the market will either hang around at that level and consolidate at that level, or it will rebound completely in reverse. Okay, and that's what's known as a resistance level. So support is a level where the market can go no further down, and resistance is a level where the market can go no further up. Okay, so support is sellers finding buyers, resistance is buyers finding the sellers. Now it's important to understand that the bigger time frame that you're trading, the more important the potential support or resistance level. So levels on a weekly time frame are going to be more significant than those on a daily time frame or a 15-minute time frame or so on and so forth. That's not to say that you can't use the levels on an intraday time frame. So for example, we trade the intraday 8 range charts, which is probably the equivalent to something like a 5-minute chart or a 15-minute chart. And we use the levels on that time frame. We don't have a problem with that. But what we also do is we pay attention to those levels on the larger time frames, because we don't want to be trading into a big support level on a daily time frame from an intraday perspective, because it just doesn't make any sense. Yes, sometimes the markets will break through it, but more often than not, before it breaks through it, it will give just enough of a bounce up to stop us out of our position and cost us some money. So you've got to pay attention to these levels to ensure that you're taking the highest probability setups. Okay, and we'll talk about that in a later video. So why do we like support and resistance levels? Well, first of all, price reacts at these levels, so we can anticipate movement. So for example, if we were in an uptrend and obviously the dominant force were the buyers, and we were in a period of profit taking, so we had a little bit of a pullback, so the market's moving up, but the actual price is just pulling back a little bit because the buyers are taking some profits, maybe some sellers are getting involved, but it's coming down to a support level. We would anticipate that price would bounce at this particular level and continue in the direction of the dominant trend, which once we combine that with some of our entry signals, they prove for some very effective trade entries. So as I said, the market's coming down to the support level. We would look at that support level and say, this is a great level to get in at a better price and follow the market in the direction of the dominant trend, being the uptrend, the long trend. Conversely, if we were in a downtrend, we would look to resistance levels. So if the market's coming down, we'd look to a previous level of resistance for the market to pull back to, where we can say, actually, this looks like a good level to get into. We're going to sell from this level. Okay, so these levels are ideal areas to look for entries and exits, because movement can be anticipated at these levels. Because ultimately, one of two things is going to happen at the level, right? Either the price will reverse or kind of consolidate around the level, or it's going to break through it. And if it breaks through the level, you need to expect it to break through with a great deal of momentum. And again, we'll talk about this in the coming videos when we talk about the strategies themselves. But right now, what I'm trying to do is just give you guys the theory so that when we come to the strategies, this really makes sense to you. And you'll look at it and you'll say, ah, okay, that makes complete sense. Now I know why they're saying that. Now I know why this sort of an entry makes sense. Okay, do you see what I mean? Are you guys following this so far? So the ideal areas to look for entries and exits, which we'll talk about in the trading systems module. And one last thing, which is very, very important for you to understand, is that a previous support level can become resistance and a previous resistance level can become support. And I'll show you what I mean by that in a chart in just a second. So they say a picture is worth 1,000 words. So let's look at what this actually looks like in real life. You have the market moving up. It creates a high point. Remember in the previous video, we called it a swing high. Well, these swing high points can also be known as resistance points. So that market there has just found resistance. Okay, so the swing high is also your resistance point. The market then moseys on up. Okay, so it's found, we've got the dominant trend as the uptrend. We have a little bit of a pullback. During that pullback, the market then finds another wall of buyers. The buyers then push the market up, creating a support point in the market. Okay, the market then pulls back again, and look at what's happening here. So a previous level of resistance, that guy there on your left, is now acting as support. Now I'm going to show you what this looks like in live charts in just a tick, because this happens all over the place and it's probably one of the most powerful trading tools that you can have. Previous level of resistance becomes support. It's amazing how well this works. Okay, so the market comes down, creates another resistance point, also known as a swing high. So we've got two resistance points on our chart so far. We've got the one support point, and we're looking at the chart now and we're thinking, you know what? This makes sense to be another support point. This would be a good place to buy the market because we're in an uptrend. The dominant force are the buyers. We're at a previous level of resistance, which could become support. This makes sense. This is where we should really look to get involved in a trade. And look at what happens. The market bounces off of that level and does what? It forms a previous level of resistance. Well, at a previous level of resistance becomes support. So it forms a support point at a previous level of resistance. Does that make sense to you guys? So if you take a look at the chart there, the market's been moving up. It finds resistance, creates a swing high, drops down, finds support, moves back up, finds resistance, comes back down, look left, previous level of resistance on your left-hand side, becomes support, and the market roars off from there. And if you think this is just, I've just created this illustration here to make it picture perfect, let's go and take a look at a chart and I'll show you how this works absolutely perfectly in real life. Now, these are some trades that we talked about during our webinars last year, well, 2 years ago. Okay, and I love this chart because it really highlights it perfectly, and I'll show you how it works on live charts in a second as well. But this one here just shows you an entire year's worth of trading, and it's something that we talked about in our webinars week after week, month after month, as we were looking at this chart in real time. And look at what happens here. The markets are coming down, so you were in a big downtrend there. And let's just take a look for a second. So the market's broken through a previous level of support. It's found resistance. It drops off from there. The market then pulls back again. What happens now? Look, support becomes resistance. Do we think it's going to become resistance again? Yeah, there's a pretty good chance. We should look for a sell opportunity here. We were selling from around the highs over here, and look at what a great entry it was. Breaks back down, finds a little bit of support at this previous support level, but breaks through it. Wonderful. Then it pulls back. Where does it pull back to? Previous level of support becomes resistance. You see, you just can't make this stuff up. This is what happens in the markets live every day. And as I say to a lot of our members, if you can wait for these sorts of trading opportunities, you will put yourself ahead of the game. You will put yourself into profit. The problem is with a lot of rookie and retail traders is that you can't wait for these particular opportunities and you want to trade anything that moves. So you end up trading like nonsense in the middle between sort of like these moves here. Maybe you try and trade that there where there's no real reason to be getting in there. You can wait for the breakout to occur. You then wait for the pullback and you trade the pullback. Okay, the market breaks through this particular support level again, pulls back to it. What happens? Well, sells off from there. Pulls back to the support level again, Previous support becomes resistance now. Resistance once. Is it going to become resistance twice? You got a pretty good chance that it will do. So what do you do there? You look to sell from that level, and look, the market then drops down. This here is the central bank intervention, the Swiss National Bank. So you know, this is why you have these particular volatile moves, and these candles are a lot bigger than the rest of the candles on the chart, but that's not a problem. Look at what happens even after the central bank intervention, pulls back to that level, previous level of support, then becomes resistance. Okay, so these are the fundamental principles that you really have to understand and you really need to get to grips with, because if you're going to be successful in this business, these are the tools that you want to use. If you can use these tools here, you will bring yourself out ahead of the game. Okay, look at this chart here. This is not the only chart that looks like this. There are many other charts out there that look like this. Now, if you can wait for the price to act harmonically like this, you got nice swinging movements down, swinging movements back up, swing down, swing up, creating support, resistance, breaks through support, becomes resistance. If you can wait for these particular opportunities, you are going to be putting yourself in a very good position to be profiting from the FX markets. However, if you don't have the discipline to do that, then that's when you're going to come a little bit unstuck. All right, so take my advice, go jump onto a chart now and see if you can identify these levels and look at how price reacts to these levels. It really is uncanny. It's amazing what price does to these levels. And if you look at enough of these charts, then you will form the same sorts of beliefs that we have in these particular levels, and we just wholeheartedly love trading these levels. They just make so much sense to us, and they really are the keys to our trading success, is understanding support and resistance and really believing in support and resistance. Okay, so I hope you enjoyed this video. Now, as I just said to you, go pull up a chart, have a look at these levels, have some fun, and look at the way price reacts with these levels. Until the next video, take care now, and I'll speak to you soon.